Hello students, welcome to class. Our topic for this lesson is buying and selling. Our focus will be on documents involved in buying and selling. In this class, students will be exposed to documents involved in buying and selling of goods and the procedures of buying and selling. We'll be starting off with introduction. All business transactions must be backed by relevant documents in order to show authenticity as well as for record purposes. Commercial documents are official papers which facilitate the act of buying and selling of goods. Now let's move on to procedures of buying and selling. In every business transactions, there are procedures and step-by-step order for business transaction to be successful. This chart shows a step-by-step order of a typical business transaction. The first is letter of inquiry, next is quotation and catalog and price list. Also have order, we have delivery note, next is issuance of invoice. Next step is statement of account, issuance of statement of account. We also have the issuance of receipts and issuance of credit notes. In the course of this class, we will explain each of these steps as we proceed. Now let's look at some essential documents used in trade, that is buying and selling. The first we have is trade journals. Trade journals are publications which serve as source of information to the buyer, as it contains articles on matters of interest to people in a particular trade. Trade journals contains information about price, terms of payment, terms of sale and delivery. The description of the goods will also be shown in the journal. Next we have is letter of inquiry. This is a letter written by the buyer to the producer or supplier asking for information about certain goods which are for sale. The letter will inquire about the terms of sale, payment, delivery and other relevant information before the buyer decides on a particular producer and what to buy. The prospective buyer may request for price list of the goods too. We also have catalog and price list. Catalog is a pictorial presentation of goods and services available for sale. It is especially used in mail order business. It is a medium of advertising too. Price list shows the current prices of various products of a company. And number 4 we have quotation. A quotation is used to let a potential customer know the cost of goods or services before they decide to purchase them. When a seller sends a quotation, it commits them to a certain price. The next item is order. An order is a confirmed request by one party to another to buy, sell, deliver or receive goods or services under specific terms and conditions. When accepted by the receiving party, an order becomes a legally binding contract. We also have invoice. An invoice is a non-negotiable commercial instrument issued by a seller to a buyer. It identifies both the trading parties and lists, describes and quantifies the items sold. It also shows the date of shipment and the mode of transportation, prices, discounts if any, and delivery and payment terms. In certain cases, an invoice serves as a demand for payment and becomes a document of title when paid in full. Next we have delivery note. A delivery note is a document accompanying a shipment of goods that lists the description and the quantity of the goods delivered. A copy of the delivery note signed by the buyer or consignee is returned to the seller or consignor as a proof of delivery. Next we have is advice note. This is a document sent by a supplier to a customer to inform him that goods he ordered have been dispatched. It usually gives details such as the quantity of goods and how they have been sent. Next is consignment note. This is a document prepared by the consignor and countersigned by the carrier or the transporter as a proof of receipt of consignment for delivery at the destination. It is used as an alternative to bill of lading, and it is normally used in inland transportation. Next is credit note. A credit note is a form or letter sent by the seller to a buyer stating that a certain amount has been credited to the buyer's account. A credit note is issued in various situations to correct a mistake, such as 1. When an invoice amount is overstated, 2. When correct discount rate is not applied, 3. When goods spoil within the warranty period, or 4. When they do not meet the buyer's specification and are returned. Credit notes are also called credit memo. Next we have is the debit note. This is prepared by the seller and sent to the buyer who has been undercharged on an invoice. It is an additional invoice sent to the buyer to pay the short amount. It informs the buyer that his account is debited, that is increasing the amount he owes. Next is receipt. The receipt is issued by the seller to the buyer as a proof of the money received. When the payment is made by check, it is not necessary to issue a receipt since the check serves as proof of payment. Lastly, for this class, we have statement of account. The statement of account is a document sent by the seller to the buyer showing the summary of all the transactions between the seller and the buyer for a particular period of time. It shows the amount of goods purchased, the returns made, the payment, cash discount if any, details of the credit note or debit note, and the amount due. Before we go, let's take a quick assessment. Question 1. What are the procedures involved in buying and selling? Question 2. Give 6 documents used in buying and selling of goods. Question 3. Write short notes on the following. 1. Order. 2. Catalog and price list. 3. Quotation. 4. Credit note. And 5. Receipts. Good luck. With this, we've come to the end of this class. Thank you for watching. Bye bye.